Everybody to the webinar. I appreciate you being on tonight. My name is John Skelton. I'm head of operations here with Apex Investing and want to thank you for taking the time to be with us tonight. Hopefully you're with us on Tuesday for the webinar. Kind of the first half of this webinar. This is kind of part 2 here. If you weren't with us, I'll show you here in just a second where you can get the recording. Okay, so let's just hop right in. Let's knock out our disclosures. Got to pop those up. Trading involves risk, and make sure you know what you're doing before you do it. Good. Thank you, everybody. We've got a lot of you on tonight. I appreciate that. So most of you guys are part of the free bootcamp open house. We invite you to come on in, try it out for free, no credit card, check it out, be in the trade room, try out all the systems and indicators. So we are here to help you make the most of that. That's why you've seen Daryl Martin being in the elite trade room every morning, spending time with you guys. We've got all the education. We're trying to do a couple webinars a week here. May even add on a third if you guys want me to do that next week. I think Daryl's going to cover both webinars next week, talking to you about some of the trade setups. If you want, I can throw a third one in as well. Okay, we're here to we really want to give you everything we can during this open house. Okay, so if y'all want more, you ask and we'll do more. Okay, speaking of the elite room, I want to just cover something briefly here. Let's hop on over to the Apex website. I want to apologize to you guys, especially those of you guys that are new. If you're here, if you go to apexinvesting.com, go ahead and sign in. And then when you get to the home page, you'll go right here to activate Bootcamp Open House. This is your life, your world, everything you need is here. As soon as you get to the page, one of the very first options here is to register for the next webinars. As you see, we're on this one here tonight. Today, Daryl added on these next two. So next week, we're going to do one Monday night and then Thursday night. Okay. Let's see here. Isaac says, should I take part in this webinar if I haven't had the opportunity to view the first one? Absolutely. You can still be on this one. Okay. It's kind of part 2, but it's in a sense separate subjects in a sense. So absolutely you can be on this one and then watch the other one and catch up. It'll all come together for you. No problem at all. Okay. Next week, Monday, simplifying the TX trades. Thursday, simplifying the double TX trades. We normally do webinars on Tuesday. Everybody knows what next Tuesday is though, right? Election night. We figured most of you guys are going to be glued to the television. So we're doing the webinar on Monday. Okay. So Monday and Thursday, make sure to get registered there. When you go to step 2 here to get into the elite room, I want to apologize to some of you guys that are newer. We've had a little rough time here the last few days with getting some of you guys in the room. Pretty much everything out here works on Google Chrome. Well, if you look it up, Google Chrome released a new update on the 21st or 24th, I don't remember, and a little glitchy on a couple of pop-ups happening, and there were some issues getting you guys in the room. But I put a quick link here, and I made a quick 4.5-minute troubleshooting video. If you watch this video 4.5 minutes, it'll show you how to get right in and fix the problem. Okay. The tech team is going to work on fixing the button to match with the Chrome update over the weekend, because they're going to have to take a couple things down. Didn't want to do that to you another week. So this quick troubleshooting video right here will show you exactly how to overcome it. 4 minutes, be in and done. And then hopefully after the weekend, that will be up and going for you. So sorry about that, but if you had any trouble getting in the room, just check out that video there. Now, for those of you that missed Tuesday's webinar, if you just keep scrolling down this sniper page right here, step number 8, webinars, and then go right here. Webinar recordings, most recent webinars. You click that, and here's the most recent webinars, and there it is right there. The one I did for you 2 days ago, understanding levels on the sniper chart. And then by tomorrow, you'll see tonight's webinar posted right here. So that's where you watch webinar recordings, okay? Is right there under step number 8. All right? So that is that. Just wanted to make sure you knew where that was and how to get there. Okay, so that was the kind of quick walkthrough there, is where to go. Everything you need is under that page there, as far as how to get in the room, how to set up your charts, how to set up NinjaTrader. There's a Skype help room helping you set up NinjaTrader, get in the room, and then learning each of the trades. Okay, so Tuesday webinar recording is right there for those of you that missed that. Tuesday, what I talked to you about Tuesday was the major kind of levels on the charts, right? I talked to you about the levels on the charts that do not come from apex order prints. Separate levels, right? We talked about deviation levels that are the expected move of the markets. We talked about flux pivot levels that are big reversal or support and resistance points. We talked about the dynamic magnet levels that come from the 10-minute chart based on high volume areas. And we talked about the ICE levels, right, that represent 80% of the previous day's volume. You know, the deviation levels have the settlement. We talked about those levels, and we talked about how each one of those levels is derived from something different. It's a different way of looking at the market for important areas, and how individually on their own they're very important, but when they're stacked together, even more important. Tonight I want to talk to you just about order prints and dig into apex order prints just a little bit more, because that's really how the market works, right? The market doesn't work just because you want it to work a certain way. It doesn't work because an indicator tells you. All an indicator does is tell you what the market has done, right? But what makes the market work, aside from news and global events, is levels, momentum, exhaustion, orders, volume. And you want to be able to see that. And order prints is really our magnifying glass into the bars. And some of you have seen order flow where it's just a bunch of numbers on a page. You don't know what to do with it. You know, we've put our algorithm onto it to interpret the things that we need to know out of order prints that are important. And that's really our edge here, and the edge with the sniper system. So I want to walk you through a few things of what is on this chart you're looking at, okay? Because we talked about this Tuesday night, right? I mean, let's be real. Let's be honest. I told you the other night on the webinar, I said, come on. You know that most of y'all pulled up the sniper chart and you all said, what the hell is this, right? There's crap everywhere. There's numbers everywhere. There's lines. There's what is this? It's overwhelming. It's too much. I don't get it. Why do I need all this? And that's what these couple webinars are for, is to, hey, let's take it piece by piece and show you what they are, show you why they're here, and what to do with them, okay? So that's what we're doing tonight here. So you guys are familiar with how a sniper chart looks. Bear with me, some of my slides here are from an older NinjaTrader 7 screenshots, but they look the same here on 8. But this is what a sniper chart looks like with some of the indicators, with order prints, and we see how they're interpreted here on order prints, okay? Where do they come from? What is behind some of this? Well, as some of you have seen before, a straight order print chart, okay, just basically shows the bars with these numbers next to them. And you're like, what are all these numbers? Well, the left side here is the sell side. This shows all of the contracts that were sold in this bar at each price level. Okay, you can see the prices over here. The right side, all these numbers are the number of contracts that were bought. So what does that mean? Just seeing, okay, that many contracts were sold, that many contracts were bought. You don't really know what to do with that, okay, without some type of interpretation. All right, and that's what we've done with our Apex order prints. You see all these little, symbols and lines and colors, and we're going to talk a little bit about those and what's important and what's not. But what we did is we got rid of all this to where you're not having to pay attention to all of it, okay, and it transfers over onto your trade chart. So let's real quick talk about exhaustion boxes, okay? It's the green or red boxes at the end of the bars, and what it does is it's showing a weak area or exhausted area in price. Now, for any of you that have already watched some of the setup videos of, the TX trades, the trapped X box trades, you might be familiar with what these are. Okay, but these red boxes here, see the red box at the top or the green box at the bottom? Okay, what that's showing is there was exhaustion down here. Okay, so an exhaustion box means this bar closed up, this bar closed up, this kept going up, but then it got exhausted up there and the bar closed the other way. Okay, so that's showing you exhaustion, and it's just showing where the momentum, the push, the drive just kind of dried up and got weak and it went the other way. Okay, that's a good thing to know, right? And it's a lot nicer to be able to know it by a red or green exhaustion box as opposed to having to pay close attention to all those order flow numbers and compare them to the numbers before and the previous bar numbers. So what that is an exhaustion box. It can be red or green. Okay, so why red and green in the same bar? Well, you'll see that sometimes, like right here. I think that's what you're asking about, is why is there a red one and a green one on the same bar? Well, because there can be, the way the algorithm looks at this when it's comparing the number of contracts compared to the rest of the bar, it can actually show exhaustion on both sides at times. Okay, what that basically means is most of the volume was all in the middle of the bar. Okay, like the market was coming up here, got real weak, came back down, there was a lot of volume. The market ended up going down, but there wasn't a ton of volume at the bottom of this bar. Okay, so it sometimes will show you exhaustion on both sides. Okay, but with our trade setups, there's particular rules that we look for, and we'll talk about that a little bit, to where we're not really worried if it's exhausted on both sides. We're looking at one particular side on a reversal bar. Okay, so just in general, you can understand why it's important to be able to know and spot that there's exhaustion in a bar, correct? If the market's going one way and then it shows some exhaustion, it'd be nice to know that. But also nice to know that with a very simple outline, not having to worry about all the numbers. Okay, what are trapped orders? Well, it's the blue shaded price area, and what it's showing is orders in one direction that came in real strong and then got rejected. Okay, so those buyers or those sellers are possibly trapped and the market's going the other way. What does that mean? Well, first of all, let's identify them. See right here, see that blue shade? Trapped order. Blue shade, trapped orders. See the blue shades in here? Trapped orders. Okay, that's what those blue shades are in your chart. Okay, that shows potential trapped orders. Now, what we're looking for in like our TX trade setups, okay, and you'll learn more about this, is like, for example, going with the trend. This is an uptrend that you see on the chart here, right? See right here, a couple down close bars, and then we have a reversal bar going back up, meaning back in the direction of the trend. As the market's making its pullback here, what do we see together all in one spot? We see exhaustion in the market here, and we also see trapped orders on the sell side here, and then it goes back up. Okay, makes sense? That's one of the things we're looking for. But let's talk a little bit about it. Okay, although if you're needing help with that, please ask in the Skype room. This webinar is just understanding the chart. It's not for help setting up NinjaTrader. Okay, there's a step-by-step videos for that, or you've got the Skype room, somebody can help you right away. Okay, guys, so to help me out, we've got a lot to cover tonight. If I don't answer your questions, not because I'm avoiding you, I'll try to answer it at the end, but I just want to stay on track, help us stay on track with what we're covering tonight. That way we don't keep everybody too long, because I know it's already a little bit late. Okay, so Steve says nice. Does that make sense, Steve? Right, like you're in a trend. What do we know happens in a trend? Market goes up, pulls back, goes up, pulls back, goes up, pulls back, goes up. Isn't it nice to see, okay, that when the market goes up and starts to pull back, to have some indication of when it's pulling back, when it's running out and getting exhausted in order to go back in the direction of the trend, right? And when you see exhaustion and trapped orders there on the reversal bar, that's a good indication of that. But now, that sounds cool, right? It's like, oh, hey, nice little webinar there, John, of, all right, there's exhaustion here and trapped orders here. Let's go the other way. That's cool. But what's really behind that? Why does it work? Why does it make sense? Right? Now, you don't need to know exactly how the engine works to drive a car, do you? Or how to tear apart the engine, or how to tear apart and rebuild the transmission to drive the car, right? So we're not necessarily trying to, you know, teach you how to be the mechanic under the hood. We want to teach you how to drive the car. But I want to help you understand a little bit what's behind it so that you get a little bit of light bulb to be like, oh, that's why it works. That's why it's important I follow the rules. That's okay. That makes sense? So I want to dig in a minute here, okay, and help you understand something. So look at this chart here. Market comes up, pulls down, goes up, pulls down. I want you to focus on this down move of the market, okay? Now, for some of you guys that have been with us for a while, you may already know this, you may already understand this. But for these open house webinars, I'm kind of going back to the basics. And this webinar is really more for you guys that are brand new with us in open house to kind of understand what's behind the scenes here, okay? So we're through pilot training. Nice, Jerry. So that's what we're doing here. So notice these bars that are coming down, okay? Now, looking at this order prints chart, on the left-hand side here, this is the number of contracts that was sold, okay? And then on this next bar, number of contracts that was sold, 78, 57, 21, 184, 75, 72. The next bar, getting a little more, 172, 89, right? Everybody understand that? Let me ask you a question. For those of you who are new, those of you that have been around a while, you've heard me ask this and teach this. When some of you guys first started trading, you might not have had a real clear system, or maybe you're waiting on some random crossover or indicator. Did you ever find yourself hesitating? Like, okay, technically I should be getting in right now, but I want to wait another bar, maybe two. I want a little more confirmation it's going my direction. I just, okay, all right, there's a couple more bars. I think maybe the market really is turning around now. Let me give it another bar or two. Okay, now there's a couple more bars. Okay, I think the market's really going to go. Now, after I've waited multiple bars to make myself feel better emotionally and my confidence, now I'm going to get in. And what happened to you 90% of the time? Boom. Gotcha. Bam. Goes the other way, right? Like here, right? Market comes down, then another bar, then another bar, then another bar. Oh, I'm feeling better about this. Starting to feel good. Another bar. Yeah, I'm feeling confident. Notice here. Look at the contracts on the sell side. See this? Like 75, 72, 89 sold, 58 sold. Oh, I'm starting to feel better. This is you, right? Next bar, 78, 61, 63. Now you're saying, man, that's been several bars down. I think the market's really revert. I'm going to get in. And that's you. Look what happens right here. Boom. 216, 137, 105. See this yellow right here? 381 sold contracts, 258 sold contracts. Do you see that? All those orders piling in down here. See how this is shaded yellow? On your chart, guess what color that's shaded? Blue. Those are trapped orders. And that's been you, hasn't it? Well, I think maybe. Now I'm going to pile in. Boom, 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 boom. All the sellers coming in. All the retail people coming in right here. Like, all right, now I'm piling in. We're going to go short. And what does the market do? Bam. Goes the other way. Do you see that? How many times has that been you? You sold at the bottom or you bought at the top, right? Now George says, why is it trapped? Well, it's trapped because the market's coming down, and then all of a sudden when sellers start piling in, they're trapped. Why are they trapped? Because they sold right here. George, let me ask you this. If you were one of the sellers right here to go short, that means you're in the market. You own a contract. If you're wrong and the market goes against you, you've probably got your stop up here somewhere, don't you? Right? So guess what's sitting up here is easy pickings. Something that they can, what? Buy and run up. Ah, makes sense? So that's why they're trapped, because there's all these people here going short and their stops are up here. So then what happened was the big boys start pushing it up. See all these big orders that come in on the buy side? So let me ask you this. So would you rather be one of these sellers right here that's going short and the market goes against them? Or would you rather have order prints that tells you boom, 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 boom. They're starting to pile in. There's trapped orders here. And you see that if this bar closes up, you want your entry to be where? One tick above the close of the bar to scalp it up. Just like our sniper trades teach you to do. Right? That makes sense? Okay. Yeah, we will talk about that. But does that make sense what trapped orders are now? And why they're on the chart and why they're important? You can see a little bit of it up here too. See, as this is coming up, got 100, 64, 100, 100, what? 900 buy contracts, 800 buy contracts, and we go the other way. So does that make sense why a trapped order is powerful? And you know what? Some of you are like, well, okay, maybe I don't understand some of your terminologies, John. But I know every single one of you understands that you damn well don't like being this person right here, and you've been this person a ton of times, haven't you? As soon as you finally decide to get in, it goes the other way. Yes, Hugo, exactly. All the sellers here are trapped. That's what we mean by trapped order. Because it looks like it's coming down. Look, the sellers are piling in here to go short, and they're trapped because the big boy said, nope, we're going back up. And we're leaving you down here, and we're going to come up here and get your orders at your stop order. So being able to see that trap and wait for this bar to close back up, we get in right here, and we scalp it for a couple bars in our sniper trade. That's the point of it. Does that make sense? Right? And do you see now how instead of being that person that gets trapped and gets hit, we wait for that trap to get set, wait for the trap to go off on everyone else, and we follow the big boys up this way. Okay? Buying the seller's stops. William, exactly. Exactly. Because they sold right here, right, William, to go short. So their stop's up here somewhere. We're going with the big boys to eat those stops and just grab a couple bars out of it. Exactly. Now, if you've watched the videos about the sniper setup, we don't just take a trade because there's trapped orders, right? What's the other thing we're looking for on that reversal bar? An exhaustion box. See this box at the bottom here? Exhaustion box. I want you to notice something else about this. Look at these orders as the market's coming down. 75, 72, 89, 58, 61, 53, then boom, 137. One price level down, meaning one tick down, 105. one tick down 381, one tick down 258, boom, 5. Do you see that drop off from 380 down to 250 down to 5? What would you call that? Would you call that exhaustion in the direction of the selling? Would you call that just a drop off? Do you see it visually? Like, it's not hard to understand this, is it? Meaning 381 contracts. Just one tick below it, only 258 contracts. Just one tick below that, 5. Dropped off. Yes, exactly, Jack. And then what do you notice here on these bars that are coming down? Look at the buy side. 0 contracts, 3 contracts, 3, 37, 14, and 12. Boom, 100 contracts, 300 contracts. You see that? The sellers pushed in deep. This is all the retailers, the individual traders, the you and I people piling in. Boom, oh yeah, boom. The big boy said, boom. We're not selling anymore, we're buying. Go. Everybody get that now? So, do you understand why it's so powerful? Okay, look up here. It's kind of the same thing. Look at this. 861 contracts bought. One tick above it, 922 contracts bought. One tick above it, 812 contracts bought. Bam, 150. 150 still seems like a lot of contracts, but not compared to these numbers here, right? And just one tick difference, it's exhausted. The interest is gone. So when that bar reverses, because see, these are down closed bars. When this bar reverses and closes up, and at the bottom of that bar, you've got trapped sellers and exhaustion. Do you see why you might want to have an order waiting right here, one tick above the bar, to just scalp it up for a couple bars? Yeah, Michael, exactly. Without these order prints to be able to see this, you get left behind. You're trading in the dark. You have no idea what's going on behind the scenes. Does this make sense, guys? This might not have been the webinar y'all were expecting, especially those of you that are new, but does this make sense why I wanted you to understand what's behind this and what's behind the system you're learning? It's not because we found some cool indicator that when this indicator crosses this moving average, we're going to create a buy signal and try to make a system out of it and sell it to people. That doesn't mean crap. Like what moves the market is orders and volume. And I want you to understand, and I'm not going to bore you all night with algorithms of what's behind it. I want you to see that there's reasons behind these things. Okay? and you can see that now, right? Why you want to, and what's nice is you don't have to look at a chart like this. You don't have to pay attention to all these numbers. What we've done is we've taken the important ones, okay, and we've transferred them over to your chart, okay, to the sniper charts. All right, you don't have to worry about all this. It's all in the background, and we transfer it right over to the charts. All right, so I just want you to see a little bit of that. So what is a TX trade? Well, I want you to stop and really think about it. You wouldn't have realized this before, but we want a reversal bar with trapped orders and an exhaustion box, right? So what is it we're really trading in the market? Are we trading a random indicator? Are we trading some special apex crossover indicator? No, we're simply looking for what? We're finding exhaustion and rejection in the market, combining that exhaustion and rejection with trapped orders going the other way. Even better if it's off a level, and we're just going the other way. We're taking advantage of that exhaustion and trapped market and going the other way with the big boys. And we're not even trying to get 300 points out of it. We're just making sure we get a scalp of a few bars out of it with this particular setup. And that's, maybe you understand a little more now, you know, like, oh, Apex has their sniper trading system. That's just some fancy little sales name they made up. Well, do you see there's more to it than that? There's a reason it's called the sniper system. What does a sniper do? The sniper's not out there shooting a million bullets. The sniper's not out there shotgunning the whole thing. The sniper's waiting for the right perfect shot where all the conditions are right, the wind is right, the terrain is right, the weather's right, the visibility is right, and we're waiting for that market to be exhausted, rejected, trapped, and pushing the other way, and we want to hop in and go with it. Okay? And that's why we talk a lot about, you know, being able to identify those weak areas of the market. And that's what you're doing. Okay? Is we don't want to go with the weakness of the market, because that's when we sell at the bottom or buy at the top. We want to go with the strength of the market, and that's how we can focus on probability trades, not just possibility trades. Does that make a little more sense? Not just how it works, but also why we named it that way, why we say the things we say, why we focus on probability, and why we're very particular about the rules. And so that's why I want to just show you, hey, what's behind this? And when you get it, that there's a real reason for the rules, not just, we got to make up some stuff to teach, then you'll want to follow the rules. Okay? So, all right. So now let's talk about levels. Levels that are created by order prints. Okay? We talked the other day that we know that the market respects levels and reacts to levels, right? So therefore, you should respect and react to levels. Because levels can be supply demand, it could be fear, it could be perceived value, it could be, you know, levels of interest. And levels are a lot of people talk about support and resistance and this level, but there's so many hidden levels that you'll never know about without having an accurate interpretation of order prints. So we're going to go through several levels, several other things that are generated by order prints that are on your chart here to make sure you understand what they are. So let's talk about high volume clusters, okay, or what we call clusters. They're a yellow shaded price cell, and basically what it means is that there's multiple times the volume in that price cell compared to the last X number of bars, okay? And you'll see them on your sniper chart, right? All over the place, right? These yellow shades, have you seen those on your charts or in the room charts? Those are volume clusters, okay? And as you go through some of the setup training, you'll see how there's some rules about, hey, you know, we stay out if there's, you know, 2 clusters within 3 bars. That could mean some chop, right? But clusters are important. Basically what the clusters are showing is they're showing a fight, a battle right there. They're showing a lot of orders coming in right there. More orders right there than at previous places. But that's how they look on your chart. Yellow clusters. What's behind that? Well, let me show you. Here's an order prints chart. You see this cluster right here. 505 sell orders, 551 buy orders. Do you see how that's more than any other area on this bar? And way more than anything here on this bar? And way more than anything here on this bar? And way more than here? Make sense? Why that cluster is there? That was the highest volume price level in the last X number of bars. So letting you know, hey, something's happening. Orders are popping in. There's a fight happening here. Something's going on. Make sense what that is? It's not just, oh, we decided just to shade that level there. Okay. Mark says, if a cluster is at one end of a bar or the other, does that help confirm the direction of the price? You know what, Mark? When we first, years back, when we first started developing order prints, that was a question Lori and I had. And we went back and we went through weeks and days and months. And you know what? We did not find that that made a difference. Okay. So we did not find that it made a difference where in the bar that it was located at. Okay. So everybody understand that. That's a volume cluster. It's on your chart and you see what it means, right? So do you also now, and once you get into the training setups, one of the rules is if there's two clusters within 3 bars, stay out of the trade right there because it could mean chop is coming. Do you now understand why? Because all of a sudden a bunch of orders are coming in, and then say in the next bar a lot more orders are coming in. It could be a place of accumulation. Make sense? Like if you see too many clusters coming in right after each other, something's going on right there. It might be a time that the market's about to stall out and go into accumulation mode and chop or range. Make sense? Why that rule is there? Okay. Yes, Mark, exactly. Okay. So, Hugo, we're just talking about the charts for tonight, bud. Okay. No problem at all for the questions. But just trying to make sure everybody understands the charts. Everything else is covered in the training, but we're going to keep doing more of these webinars. Okay. So let's move forward here because institutional blocks, or what we call I blocks, these are very important. Let me ask you a question. If we were able to see, which we can, and just as an example, let me find a good one to show you. Or just as an example right here. Let's just say. See this 894? If we were able to tell that that all came in as one order, not that it was spread out between hundreds of clients and hundreds of traders and they were doing 2 or 3, but 890 contracts all at once, a block order. Is that you or me doing that? Or is that a big time institution doing that? It's an institution. Yeah, Susan, I wish too, right? Okay. So it's very helpful if we can see where these institutional blocks of orders come into play. Don't you agree? Because these are large orders that are generally placed by banks or institution investing firms, not like us, not individual retail traders. And you know, to be able to see where those are can be very helpful, because if there's a place in the market where big institutions got in, or when a lot of institutional orders were getting out, down the road, those levels can act as support and resistance, right? Where there was large areas of volume. Okay, so those are on the chart, and they are, see this green block right here, that green line? So we call a green I block. See this reddish brown one here? Okay, that's a red I block, meaning that it was red because that was sellers. There was a big chunk sold there. Right here was green, buyers. See it? Okay, that's what those are. That green and this reddish brown looking, those are institutional blocks. Okay, see how that's nice to know and to be able to see that? when you're looking at the market, you're looking at things, maybe you're looking for some exhaustion, maybe you're looking for some trapped orders, and you see an institutional blocks coming in right there on a reversal. That's nice, right? But also you want to be able to see these down the road as they're drawn out into the future to know, hey, that was an important level right there. Okay. Yes, ICE has nothing to do with institutions. ICE, if you check out the webinar recording from the other night, ICE is about where the most volume was done yesterday. ICE has nothing to do with institutions. Okay. ICE is about where the volume was. These green and reddish ones here, you see, okay, those are institutional block orders. There was large block orders placed there. Okay, that's what those lines are on your chart. Let's talk about mini magnets. Mini magnets are very important, and mini magnets are a very big part of the chart and some of our walls and levels. They're designated by a thin white or cream colored line. They're a price level of price rejection and attraction, meaning the price will normally push off of a mini magnet and will attract back to mini magnets. Okay, and what they are is they're levels of rejection in the market where orders were left there and pushed away. Okay, so what do they look like? The white lines you see. This is a mini magnet. This down here at the bottom is a mini magnet. This up here, mini magnet. Right here, mini magnet. Okay, you'll see those all over your chart. And again, the market normally pushes away from them, or pushes away from them, is attracted back to them. Mini magnet, mini magnet, mini magnet. All you gotta do is look at your chart and you're gonna see mini magnets everywhere. Okay, makes sense? Stan, they don't always have to be iceberg orders. I mean, I think like on NQ, for example, the are you asking about the institutional orders? I think for an institutional block to print, it only has to be a block order of like 50 orders. Okay, so it doesn't always mean it's hundreds and hundreds or thousands of orders. You know, it could just be a 50 block even. Okay, not always, George. Okay, not always. It could be a market going up and big buyers coming in to keep going. It doesn't always mean a reversal on the institutional blocks, the I blocks. We don't use those for us to necessarily look for reversals. It's more when you see them stacked up together or other things stacked close to those, the market, it normally creates a big support or resistance area. Okay, where the market's not always going to just plow right through an area where you know, an institution got in. Okay, Benicio, check it out here. You see this reversal bar where it had a wick. Okay, there was a wick here, and notice there was 86 sold, 48 bought, and then it created a mini magnet. When you have a wick, okay, notice right here, see this wick, 7 and 60. See this wick right here at the top at 5 and 8, created a mini magnet. Then notice this one had 0 and 19. If there's a 0 on one of the wicks, it won't create a mini magnet. When there's still orders here, it basically shows like it was unfinished. There was still action going there at that price. There were still buyers, but it pushed away from it. It rejected that price. Exactly, Robert. Unfinished. But mini magnets are important because, like I said, the market pushes off of them and is attracted back. But they do a lot to help us create our walls and blocks that we're going to talk about in a minute. Okay. So that's what the white lines are, is the mini magnets. Zone of interest, very important. We call them a ZOI. Okay, it's a price level that the market likes and has a lot of participation or interest at. Okay, and the market will often attract back to those, or again can push off. They are designated in either Green, see these? You see these on your chart? Like a greenish zone or like this bluish purplish zone. Here's another one here. Okay, those are ZOIs, zones of interest. Okay, they're different colors because it might have been on the buy side or the sell side. Okay, but there's zones of interest where, and I'm trying to be able to find one to show you on the other chart here. Good example, just so you understand what's behind it. Again, I don't want to bore you all night with these examples, but I want you to feel like okay, I don't need to know how the engine works necessarily to drive the car, but it's kind of cool knowing that what's behind it a little bit. It's cool knowing, okay, there is a reason for this stuff. And let me show you here. So let's just say basically price was moving along, market was moving along, and then suddenly there's a few price areas all at once where, here we go, right here on the order prints chart. Do you see this in here? 51, 69, 38, 120, 64, boom, 224, boom, 439, boom, 277. See where there's several price sells in a row where there's just a lot of orders coming in. That will create a zone of interest. Because all of a sudden in this price area here, it wasn't all on one price level, but it was like a few price levels. You see a big difference, right? From the other price levels, and they all come in. That's what will create one of these shades right here, a zone of interest. It's normally at least 3 price levels to create that zone. Does that make sense? Yeah, the color itself is not so important because we're not necessarily using it to, buy now or sell now. It's more, hey, this zone, there was interest there. So if the market comes way up and then later comes back down to that area of interest, doesn't really matter whether there was a buy area or a sell area, that could cause some hesitation, right? When it comes back down to that level, because that was an important level. So it's more about, it's not so much the color, it's more about knowing that it's an important level. Make sense why we have those plot on the chart? If you look over here at this order prints chart, there's a million different colors and blobs and this and that saying different things. We don't put them all on your chart. We don't want to completely overwhelm you. We're looking for the important things here. Okay? Matthew says, is that a take profit area? Not always, Matthew, but it definitely could be, especially if they line up with some other things. Okay? And I'm going to show you some examples of that here in just a minute. Okay? Because, okay, I'm going to skip ahead to something here. Let me pull this chart over. Now you're going to get me all out of whack. We haven't even really gotten far in this webinar. But is there anything that jumps out to you guys on this ES chart from today right in front of you here? Like right here? What were we just talking about? Let me switch to this. Do you guys see this green zone of interest right here? Can you see it? Let me pop in a little deeper. Everybody see that green zone of interest? This bigger shade right here? Yeah? What do you see just literally at the bottom of that zone of interest? That darker green line. Like literally on the bottom of the zone of interest, what do you see that green line? I block? Perfect. Look left. What do you see just to the left that's also right there? It's white. What is that? The white. Mini magnet. What's underneath the mini magnet that's purple? Another ZOI. So basically, a selling zone of interest, when the market got there, It hesitated, stopped here. And then what happened? Buyers came in, created another zone of interest, and a block order hit there. This was also the same level in the past that price got rejected and created a mini magnet, all lined up right there. You see that? Could you see this on any old random chart without order prints? No. Sorry, but you can't. So let me ask you a question. If you were trading this today live and you saw this happen right here at about 150 today, and you saw this level hit with this level, would it be smart to right then see that and go, oh, that's cool, let me just keep looking around? Or would it be smart to go, okay, that should stand out to me like a freaking red flag. What I probably should do is take my drawing tool and draw this forward on my chart. Like, you're live right here. There's nothing happening over here. But would it be smart for you to draw that forward on your chart? Right? To be like, I'm giving myself a heads up right there. To know that that's an important area if and when the market later gets back to it. And what happened? Yeah, the ZOI would draw forward. Okay. But back here, somebody says, hey, why would you draw it forward? I mean, wouldn't the ZOI draw forward? Absolutely it would. Okay, the ZOI will draw forward. But what doesn't draw forward, look, this ZOI draws forward until what? Until it's broken, right? Okay. Matthew, does that make sense? But what's important for me is to the left. This ZOI and mini magnet stopped plotting because it got broken by price. Something I personally do in my trading is I'll look for these things because I can look forward and see all kind of stuff, but to look left and go, hey, this is a block and ZOI that literally line up with a ZOI and mini magnet back here. I want to go ahead and draw that forward to myself to say, hey, this isn't just a random ZOI drawn forward in the future. This is an important one. Does that make sense, Matthew? That's a good question, though. Okay. So if I'm trading this today and I had this drawn forward into the future, let's say that I was in this trade going short. Let's just say, right? The market's coming down, market's coming down, market's coming down, market's coming down, hits that level. Does my stop need to be way the hell back up here? Where should my stop be? Yeah, because I'm expecting it not to go through there very easy. I should have my stop right close and expecting to be out, right? And am I in any way, shape, or form surprised that the market just pushed through? And guys, what happened? I'm not saying this was a trade setup. I'm saying learn the chart. Market's pushing, pushing, pushing. Do we expect it to just bam, hit some crap right here? Do we expect, are we surprised that the bottom of this bar got exhausted? See that exhaustion box? Are we surprised that people that were trying to push down through here even more, retail sellers that had no clue this was here because they don't use order prints, got trapped right there? And then the market leaves a mini magnet right there saying, bam, we're rejecting all you orders that are still active right there, unfinished auction. And bam, there's a cluster fight right there See the yellow? And this reversal bar created what? Another zone of interest. There's all that fight going on there. That bar closes up. Boom. So, seeing that happened, and that a cluster was laid there, and a new ZOI laid there, do you think this might still be an important level coming back down here? Well, the market came right to it, pulled back up, then came back and fought there, pulled back up, left a mini, man, it got rejected, and then went down. So it didn't stop and reverse there, but it was still a little fight area. Okay. Is that helpful at all, guys, to understand how and why these are important? Because the order prints, the algorithm creates these things on the chart that you don't know was ever there. Like, okay, John, you know, who cares that there was 3 price levels and a lot of people came in and started buying or selling there? They were interested there. Who, you know, well, I mean, come on. When all of a sudden you've just got 42, 38, 65, boom, 200, 400, 20. I want to know. I want to know that was an interest level there. Something right there in the market interested people. They came in. I want a heads up. I want that zone shaded on there. I want to know that that's the same exact place that in the past there was a level of interest there and a level of rejection there and a block order from institutions there. I sure as hell want to know that. Don't you? Yeah, William says you got to look into the water to see the fish. Like, that's important to know those things. And I could never see them without order prints. And I don't mean order flow that you can get anywhere that gives you a bunch of random numbers that mean jack. How many of y'all ever looked at order flow before or downloaded order flow indicators or order flow training? I've looked at it for years before we ever did it at Apex here. And it was the most confusing thing. I mean, I'm going to be honest with you. When Daryl first started, yeah, let's really get into this order print. And Lord, I was like, oh, God, no. I don't want to touch that crap. Because I'd watched webinars. I'd been on webinar. And it made no sense at all. Some guru salesy guy on the webinar like, and you see these orders numbers coming down and you need to know what to do. And I'm like, dude, I don't even know what you're talking about right now. Like, yeah, it's like Space Odyssey. Like, yeah, Kimberly, it paralyzes you, right? Wasted, and you're like, what? But when you have the Apex algorithms that are set in place here, can interpret these numbers, put them into symbols on your chart that mean something. Like I said, I don't want to bore you on algorithms. I'm trying to show you why this is here and show you over here. It's because of this happens. And why is this cluster? It's because there's a reason behind them and they're important. And you just really don't know how to use this order flow without interpretation. But when that interpretation's there, that's why you always hear me talk about it's the magnifying glass. It's the true vision. You really get to see what's going on, right? And it shows you a whole new world. And once you see that whole new world, and I don't mean this to be salesy, like once you come to Apex, you can never leave. But once you've traded like this and had this vision of the market and be able to see these levels, you're going to be, and you get to using it, you're going to be scared to ever trade without it. Okay? Like, I don't mean that salesy. I mean, just be real. Like, it should scare the crap out of you. I told you the other night, it's like driving down the highway at 70 miles an hour, risking your life with a blindfold on. It's no different than trying to trade this market with your live money and risk your livelihood and your family's livelihood without having a clear vision. I still have more to show you on these slides, but just from what you've learned, look at this chart. If I had to tell you guys, I want you to mark 4 areas on this chart that really need to stand out to you. Okay? Well, we already marked one, right? That one's just clear as day to you, right? We got stuff to the left, we got all this stuff here. So that should be marked. Not everybody does this, guys, but this is something I do on my trading charts every morning and a couple times throughout the day. I like to zoom in my chart. You hit the control button and the up arrow or the down arrow. And I like to squeeze it and see these. Okay, look towards the bottom here. I've got mini magnet, I've got mini magnet, I've got paw print, which I'll show you in a minute. I got another paw print. Is that worth drawing? Probably there. Like, yeah, you know what? I want to be mindful of that going into the future. Okay. I think I want to be mindful of this area here in the future. I mean, granted, those 2 mini magnets are on top of each other and they're drawn out in the future. I can see them. But I've got these 2 things right back here. I want to see that. There's a lot of block orders right in here, aren't there? In this area here. Notice it didn't stop the market, but it didn't go much further. I'm going to definitely be paying attention to that. Right up here, do you see these 2? These orange things are paw prints. I'll teach you those in a minute. And if you come over to the right, there's a mini magnet. And just a little more, here's a paw print. And then right here is another paw print. And then right here is another paw print. And a white mini magnet. And a, look at this. See that cluster right there? See the yellow cluster where boom, 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 orders came in? Look to the left. Almost at the same price level clusters. Boom, boom, boom. Over here to the left, cluster. You get it? Look left. You get it? So I'm going to probably want this level drawn into the future on my chart. Even though I can see them, I'm going to probably want that level there, right? Just to give myself a little extra heads up. And then right up here at this peak, I've got 2 paw prints from the past, which means a weak price area. And then the market rejects there again and leaves another paw print, weak price area. I'm going to probably mark that too for myself. And I'm not saying you have to do this. This is something I do myself that I find helpful for me. And I'm going to draw all that out into the future. Now, I can be doing this live as I see it, right? I might be only live right here and I can still see these things and draw them out. So when I go out into the future here, I can kind of look at those as kind of like the playing field or kind of like the end zones. Does that make sense? And we can see this one area we were looking at earlier where the market rejected off of it. It fought it a little right here, but then what happens when it came back to it? That was the new pivot point, right? So when I've got these quote-unquote end zones drawn out here, if I'm in a trade going into any of these end zones, what am I doing? Tightening up or getting out. If I see a trade setup that goes into one of these end zones, do you think I'm taking that trade setup? No. Right? Yeah, and if you're trading somebody asked about simplicity. Same thing, not just the sniper scalp setups, but if I'm in a simplicity trade and it's going into one of those, I can damn well tell you this. If I'm in a simplicity trade that's going into one of these stacked levels, do you think my stop is way back up there above that last solid freaking line, 5-10 points back? Way the heck back there? No, come on. I'm sorry, I'm going to rant here. It's one of the biggest things that just irks me when people are trading simplicity. Because, all right, everybody always jokes and says, oh great, Daryl's not doing the webinar tonight, John's doing the webinar. That means we're going to get yelled at, because I normally yell at you guys. I don't yell, I just get on to you, right? But I'll tell you one thing. One thing that ticks me off, guys, is you get so wrapped up in the new shiny little toy and you run over to Trade Simplicity and you're looking at that 30-second chart, and all you're doing is looking at that damn 30-second chart. Excuse my language. Because you're looking at the chart and those two lines, and you're so focused on that Simplicity chart and where's your entry and where's your stop and how much money am I going to make. I'll guarantee you most of you are spending 90% of your time on Simplicity chart and you don't look at this chart. And I know that because I see somebody go, oh man, I was up $500, but it came all the way back up to my stop and now I only made $250. And I'm like, it was going into a huge brick stack wall. Why would you have left your stop way back there? Why didn't you protect your profits? It was right in front of you. The market screamed at you. There's a brick wall. Okay? It's so important, no matter what you trade, to see these levels and to see these things that order prints plots. And when they stack up, be aware. So guys, I got way off track there because I was going to go through all these slides and with you. But we got a little off track onto this chart. But was that at all helpful? I mean, I'm going to still go a little further here, but does that make sense to where I wanted to show you just a few examples? Look, these are not just no reason. There's a reason that these things are plotted on the chart. Let me show you why, what's in the background. Oh, cool, you got it, they're important. Now, why are they important? Okay, yeah, definitely can be a little overload, Steve, right? That's why they're important, okay? So I want to go a little further here because there's a few we haven't covered, okay? Volume score, it's the number on the top of the bar. It's not to be confused with oscillation detector. Okay, a score lower than 13 is considered a weak score. Okay, VS or volume score. It's these numbers right here. You see them? It's basically a calculation that shows the strength in that bar. It's basically given a score to the fight between the buyers and sellers, as it were. So any number that's 13 or less is considered a weak bar. Okay, that's why sometimes you'll see, you know, a 6 here and then a reversal bar, 11 here, then a reversal bar. Okay, we have some trade setups that are based on a low volume score, you know, plus some other things combined. But those numbers at the top of your bar are part of order prints, and it's called volume score. You'll learn how to use them in the trade setup training. I just want to make sure that you can identify them and know what's on your chart. Okay, so that's volume score. Now, we have already talked about Paul prints. That's the orange lines here. Okay, what are Paul prints? Well, let me just show you. Paul prints basically means a weak price level. You see this here? 0 and 7 created a Paul print. That was a weak price level compared to the price levels around it. Do you see that? It's not a complicated algorithm, right? You see why that was a Paul print, why that was a weak area compared to all the other numbers around it. Shows you a weak price level. Okay? See it again right here. See everything around it, and then a 7 and a 0. It's just a low, weak price level. Same here. See all this? 160, 270, 380, but 0 and 6. Weak price level, reversal. Okay? That's what a Paul is. Paul print. It just means a weak price level. And that's what the orange lines are right here on your chart. Okay? So that covers the main parts of order prints that are on this chart. A couple other things. The stars are right here. See this red X? See the X outlined in red? Let me zoom in for you more. Okay, see this red X? That's called an absorption X. And it's in red saying the bias is short because the buyers got absorbed. It's a little bit different calculation than the exhaustion. So not only was there exhaustion at the top here, see the box, but it's also saying the buyers got absorbed. Okay, meaning they kind of ran, the buyers kind of got absorbed and the sellers took over. So remember how we talked, so exhaustion is just weakness in the buying, but this is saying the buyers got absorbed and selling strength came in. Make sense? Just like we saw in some of those other examples. So you can see why this is so powerful right here, right? Do you see why this bar right here is so powerful? Because why? There was a cluster fight. There was an exhaustion box. There was trapped orders. See the blue? There was a mini magnet showing rejection. And there was an absorption X. That's a pretty nice combination there, isn't it? And the bar before it had a low volume score and a ZOI. Do you see all that? Like, does that make sense? Why you really do want to see these things. They're a pain in the butt sometimes to have all this stuff on your chart. I agree. But would you rather it not have it? Or would you rather be able to say, man, I feel like I have vision now into the market that I never had before? Okay? Now, I'm not saying that's a trade setup. I'm not saying that's a valid trade setup according to any of our rules. I'm just saying, do you see the power of what it's showing you, of what's happening right there in the market? It's clarity, it's vision, it's insight that you'll never see on just a regular old 5-minute chart with crossover EMAs. Okay? This red star, anybody see these stars? See the stars? Those are momentum stars, showing that there was momentum that came into the market on the sell side. Doesn't mean the buyers were absorbed like this one. The red X, the circle X is absorption. The circle stars means momentum. There's momentum that came in that bar. Okay? As you go through the training videos of the entry rules, it'll talk about some of these. Well, hey, we need a trapped order and an X box, or we need a star and a low volume score. So this is more for you to identify, wait, what does that mean? Okay, that's a green momentum star. There was momentum to the upside. So red momentum star, momentum to the downside, right? The clusters are the yellow things. That means a fight, a lot of orders coming in. All right, the blue is trapped orders. There were some traps going on down here. The white's the mini magnet. That means there were still some contracts down there that got rejected and pushed away from. Okay, great. The brown or the orange is a paw print. That means a weak price level at the top of the bar and it went the other way. Okay, got it. Okay. Does that make a little more sense what some of this stuff is, guys, and why it's there? There's still a few other things on the chart we haven't got to that have a lot to do with divergence and volume. And I'm going to do a whole webinar on divergence. Okay, that's the spooky faces there. So for those of you that were on Tuesday night, I did not cover any of the order print stuff Tuesday, right? I talked to you about deviation levels, dynamic magnets, ice, flux levels, and walls, right? And each one of these things from the other night measured differently, right? Deviation levels measured the expected move of the market. Dynamic magnets were on a 10-minute chart. I mean, I'm sorry. The dynamic magnets were on a 10-minute chart and showed you high volume areas. The ice showed you yesterday's volume areas. The flux levels showed the big hourly charts and 4-hour charts, like reversal areas and support resistance areas, right? And then the NQ walls, the walls showed big movement areas that started off. They all measured something differently, but gave you important levels. Some of them were on smaller 10-tick charts. Some of them were on 4-hour charts. Remember how we talked about that? How each one on their own was important, but then when combined, they're even stronger. Now, when we put it all together and we add in the order prints levels from a smaller time frame down to the tick, and they all come together, do you think that's pretty important? Let me show you something. On this chart here that I've been showing you, I wanted to make it easier to see. Remember how Tuesday I took a bunch of stuff off the charts? I didn't have all these order prints on the charts Tuesday, remember? Because I didn't want to overwhelm you. I wanted to make it easier to show you. Okay, remember up here when we marked this level, for example? And why did I say to mark this? Because back here were 2 paw prints from the past. So twice this level showed us a weak price area at some point in the past. And then right here on this reversal bar, it again puts another paw print. So that was kind of an important level. You see that? This one right here, like 1435. So what if I use the full chart that copies over all the levels, your levels from the big chart? What else do we see was right there at that same area? Boom, dynamic magnet from a 10-minute chart. Boom, another dynamic magnet from a 10-minute chart. Remember down here when we had all these block areas? Well, now when we see the whole picture, what do we also have? Dynamic magnets. Remember here, this was that area we drew out to the right here. Y'all remember that? This one? Remember, we drew it out, right? Just on what we saw with order prints, we drew this level, right? But now, if we look at the full chart that you guys are looking at, stacked right there as well is what? A dynamic magnet level. It looks like 2 of them on top of each other, doesn't it? So now, when you pop everything together and zoom in and zoom out, we're not always worried about one little level here and one little level there. But when we see, man, that's awfully interesting that a short time frame order prints chart just plopped a magnet there or a paw print there. And in the past, it did the same thing. And a 60-minute chart put a flux level there. And there's a deviation level there. And the 10-minute chart put a dynamic magnet right in that area. And there's a, I mean, it doesn't kind of get any more in your face than that, right? And can you see how that kind of draws out your playing field and your end zones and your out of bounds zones and your, hey, heads up zones? I'm yelling and screaming at you, but some of you are too busy looking at a simplicity chart to pay attention to me. Makes sense, guys? So we're not always worried about the single levels. Okay? We're not always worried about one single thing, right? Because sometimes we can get through one single level. Yeah? But when you put a bunch, like you can break one twig, but when you put a bundle of twigs together, it's pretty strong, isn't it? Right? Break one twig. Try breaking this bundle of them. It's like you're walking down the street, there's a line of bricks. You can step over that, can't you? That's just one line of bricks, right, William? But what about when you got a lot of bricks stacked on top of each other and it creates a wall? You can't just step over that real quick, right? When you got one or two little lines, the market might bump, might be a little speed bump in the parking lot, right? But now you've got a concrete wall barrier. And if you're not paying attention to that chart, and if you're not using these apex order prints and all these different apex levels that plot for you, you're running 70 miles an hour blindfolded into this damn brick wall. So, do you see why it's important now to have all these on there and to be able to say, man, there's a big wall coming here. The market's going to bounce off of that. Boom. Here's another wall that created. The market's going to bounce off of that. I want to know that. I want to see that. I expect that. I know it's coming. It didn't surprise me. Okay? And having those, you have a lot better vision of the market. You can start your day off by drawing them out. You can look throughout the day and draw them out. See where these end zones are. See where you want to tighten up your stops or not trade. Okay? But you hear us talk a lot at Apex about, yes, we want you to learn the trade setups. We want you to learn the rules. We want you to follow the rules and know exactly when to enter. But the one big thing we talk about is often it's just as important, if not more important. It's not just knowing when you should enter, but it's knowing when not to trade. Knowing when not to trade and knowing, hey, there's a big wall right there, don't enter, compared to, I got a clear path. That's all the difference right there between profitable and not profitable. It's not just, oh, well, I want to know how to enter a trade and win and profit. It's about how much you keep, and it's about how much you don't lose, and about how many trades you don't take because you shouldn't have. Okay? Quick question. Do you remember back when you were 16, or maybe some of you have a 16-year-old kid that was just learning to drive? Like just starting to learn to drive. Or remember when you were 16, just starting to learn to drive, and you're like overwhelmed, right? You're like, oh my God, I'm on the street and I've got all these street signs and I've got the stoplight and what are these signs? And you're like, oh my, there's signs everywhere, right? You're like, what's going on? There's signs everywhere. It's overwhelming. You're a brand new driver and it's so much. And then you got all these different lanes on the highway and you've got these, you know, these lanes and these lines in the road and which one's a solid line and dotted line and who next to me and all these different lines, and it's very overwhelming as a driver, and you're driving in traffic, there's people all around you, and it's so overwhelming, right, as a brand new driver. And then you got all these, well, yeah, I wish at 16 I had all these, right, in this Porsche. But you got all this stuff inside the car and all these gauges and gadgets and buttons and adjustment, and it's so overwhelming while you're learning to drive. Do any of y'all remember that far back? I'm showing my age here now. But do you remember how overwhelming all that was? Or recently for your kid, how overwhelming it was for them? All these gadgets and lines and signs and all this. But now, what do? It's just second nature. You hop in your car, turn it on, and you go. You see some signs, you're paying attention. It's second nature, right? It's completely second nature. It was overwhelming back then, but now after a while you've got it. You don't even pay attention to half that stuff, or you see it, your brain processes it, you see past it. You're not overwhelmed by all the street signs and the traffic and the gadgets in your car. You've got it. You see right through it. You know how to drive that car and use its feature and operate the road. And you can understand how to see and navigate roadblocks, concrete walls, traffic, congestion. You know what I'm saying? It's the same with the apex charts and levels. Right now when you're brand new, it's overwhelming. It feels like it's clutter. It feels like it's a mess. It feels like it's just so much. But I hope with these last couple webinars, as we break it down, not only do you have a better understanding of what each piece is, but you realize the importance of it, and that you're actually, that no longer becomes a bother. It's something you're happy is there and happy you have it. Yeah, Matthew said it's unconscious competence. Exactly. And so I hope this helped, but give it time. It'll become a lot less overwhelming, and it will become a lot easier to use. Okay. So, all right, guys, couple things here. I'm going to hold off. I'm going to do a whole webinar on divergence. I just think it's going to be, we've already gone so long here. And I'm going to do a whole complete webinar on divergence separate. And give me just 1 second here. Daryl's messaging me something. Oh, okay. So guys, make sure, a couple things for me. Was this helpful, guys? Did this help you understand order prints a little better and what's behind it and why it's there? Like, was this good? Is this helpful? Good. Good, good. All right, I'm glad it helped, guys, and we're going to keep doing more of these, and we're going to dig in. Okay, a couple of you are asking some questions like, hey, where can I learn this? Where can I learn that? I want to show you a few things here. By the way, I've done some other webinars like this in the past to where I dug into some of this that I taught tonight and even went a little deeper. Okay, and I want to show you where some of that is. I'm going to keep doing more of these. Daryl's going to keep doing more of these. All these are recorded. But a couple of you are saying, hey, how do I get charts like that? Or how do I set up everything? If you just log into the Apex site, okay, and then when you're on the home page, click on the Open House Sniper Bootcamp. It'll bring you to this page. If you will follow along on this page, register for webinars, get in the room, set up your charts right here in section 4, or step number 3, 4 easy steps, shows you how to set up your charts. Shows you how to use these exact templates I was just using. Everything is right there. Okay. Understanding the charts, this will go through some of what we went through tonight and more. And then learning, some of you asked about, how do I learn the rules of the trades? Well, right here, after you get your chart set up, step 5. Okay, gives you a little cheat sheet. Boom. The filtered trapped Xbox trade shows you that trade and all the rules. The double TX trade in here shows you that trade and all the rules. Hidden divergence, all the trades are right there. Okay, everything right is right there. Isaac, I wasn't trying to put you off, Isaac. It's just some of these questions weren't quick questions, quick answers like, well, what are the rules to the trades? Well, you know, there's 7 different trades and each one has a little bit different rule, but that's where it is. And you could even download a cheat sheet, and it's not one long, crazy video. This particular trade setup, 20 minutes. Teaches you the trade, teaches you the rules, teaches you when not to trade it, what to look out for, where to enter, where to put your stop, where's your take profit, everything. Boom. The next trade, 11-minute video. All the rules, what it is, what it isn't, what to look for. The next one, the next one, the next one, all broken down. Okay. For beginners, it's actually in order. Okay. Always start with this one right here, A. And guys, you don't have to know everything in order to do anything. What do I mean by that? You need to be in the room. Yes. You need to set up your NinjaTrader and your charts. Yes. You need to understand those charts. Yes. Do you need to come to step 5 and learn every single rule forward and backwards to every single one of these trades before you do anything? No. Start with A, learn this trade. This trade right here is 80% of our sniper trades. All these other trades happen, but this one is the one that happened the most. Learn this trade, watch this video, get it down, get in the room, and start demo trading it. Once you have a good handle on it, add on this one, then add on this one, then on it. You're going to confuse yourself to death if you try to learn all of these at one time. When we keep pushing you, watch the videos, watch the video. What we mean by that is get your chart set up, get Ninja set up, start learning this one, and be in the room trading it with us. Okay? Remember, guys, go right here, register for upcoming webinars, sign up for next week's webinars. Okay? Any of you that have tried to get in the trade room and had trouble, please go here to step 2, accessing the trade room. I put a video right here, 4.5 minutes troubleshooting. It'll get you right in. Okay. So once again, guys, I'm going to ask you to do me a favor. If not everybody that was in open house was on this webinar tonight, I think it's very, very important. Oh, hold on. I forgot to show you one thing. I promised somebody this. Hold on. And we moved everything around, so now I got to find it. Right. Mastering simplicity. What's next? Give me a second. There was one section here. Okay. Step number 7. Everybody see this? Step 7. If you open it, right here. Tutorials. If you are in boot camp trial and feeling overwhelmed, this section is for you. Last time we did an open house, I did 7 webinars like this one you're on tonight and like the one I did Tuesday. They're all right here. I'm gonna basically be redoing all these webinars over the next few weeks with you live. But if you want to jump ahead, learn a little bit more, these are all the ones I did. These are like the basic kind of, not Daryl's videos, not the fast training videos and do this, do this, do this. It's like, okay, let's stop. Let's walk you through it slow. Okay? Be with us on the live ones. If you want some recorded ones, right there. Tutorials, feeling overwhelmed, right there. You can jump ahead. Okay? I'm going to ask, like I asked the other night, please, please encourage other people to watch this. If you enjoyed this tonight, please hop in the trade room now or in the morning when you're in the elite trade room. Please comment like, guys, the webinar was great last night. You got to watch the recording. It really helped me out. Light bulbs going off. If you're in our Facebook groups or Skype groups, please pop on there and say something like, hey, enjoyed it. You guys should watch it. Let's really encourage everybody to watch this recording. And I have kept you guys way, way late here. So sorry we went way over, but I hope it was worth your while. Okay. Well, guys, thank you so much for your feedback, for your kind words. Get some rest tonight. Hop in the trade room tomorrow. Daryl will be in there. Pop some comments about the webinar, encouraging others. We're going to do some more of these as we go. Okay? All right, guys. Thank you so much. Have a great night. We'll see you in the morning. Thank you, Jack. Thank you, everybody. All right. Bye for now.